thing. Happy Tuesday, everybody. My name is Andy Ide. I'm a realtor here in Williamson County, Tennessee, and I'm with my best bud, Rodney Wilds, who's a loan officer for First Bank, also in Williamson County, Tennessee. And this is a real estate reality check. We just chat about stuff that's going on, just our opinions for the most part. How you doing, Rodney?
Fantastic. How are you?
Oh man, look at this. We've gone 12 seconds into this show and no glitches. It's excellent. I'm having an excellent day.
It's early.
Yeah, it is. Yeah, it is. So, were we on air since the change since uh, Jay Powell made his announcement?
No, he did that last Wednesday, um, and did it, and then after that. So it was after our show last Tuesday.
Okay. So we don't expect to be seeing huge things happen with that yet. But still, the theme of this show that I thought maybe we'd throw out there was there's hope for housing after all. You know, it's kind of been there was somebody, Danielle Hale, who is the CEO of Realtor.com, I think, but she's a pretty impressive person, Danielle Hale, and she used the term "cruel summer," which I thought was that was kind of a fair characterization of what's been going on in the real estate industry here for the last several months. You know, it's just been tough. It's just been tough. Now, would you characterize? Does It's going to sound a little bit silly, but I don't mean it to be. Does lending follow the same track as the real estate business does? Meaning, if we're having a tough time, is it all necessarily bad for lenders too?
No, not all the time. Most of the time it runs pretty congruent, but there's times where um, I remember during the crash of '05 or whatever it was, our rates that Thanksgiving dropped down to hardly anything, and we spent the next year and a half very busy, and everybody else was fighting foreclosures and everything else. So the mortgage market gets some breaks at times. Maybe the real estate market doesn't, but for the most part, I mean, we've been a purchase operation business our whole career. So it's like when refis come, we obviously try to help our friends and family and all, and customers like that. But it's our customers. I call them. I guess I call them. Once they kind of go into you do their loan once. I guess I kind of call them my friends and family there. But uh,
Yeah.
once you outside of that, no, we always focus on purchases, so it runs very congruent. But I do remember that time, and like I said, around '05, '06, rates got really good, and I remember realtors were struggling, and mortgage people were like, you know,
What's the problem?
yeah, well, not what's the problem, but we were having a very successful year financially, although there wasn't a lot of purchases going on.
Well, and the reason I ask that is because we're on the cusp, it seems to me, of something like that happening again. Because as rates come down, as they start to come down, I mean, isn't that refi city? Isn't that just when?
Yeah, but it can be. It's not right now. The applications have definitely picked up over the past few weeks, but I'm not so sure. When you get off you say if you've got a 7.5% rate, do you get off? Do you do that at 6.5? Do you do it at
Mm,
6? Do you wait to 5.5? I mean, because honestly, 6.5 is not, high to mid sixes. I don't consider that a great rate. I don't consider it a terrible rate, but I'm not sure if I'm going to say that's the best rate I'm going to get over the next couple of years.
yeah. It just it seems. I mean, for us, it's sort of a one-track pony for the most part. You know, we don't get to engage clientele for anything other usually than buying and selling houses, as opposed to the other mechanics behind it, meaning the refi. So that's where the question came from. So let me jump in. Excuse me. I'm going to take a drink. Let's get my throat squared away. There we go. There we go. Let's do this way. Bang. Whoops. Sorry. There you go. There's that glitch I was looking for. So the first thing I wanted to talk about was the rate cut does offer hope as home prices stall and inventory growth slows. And now this is written by they're getting this from Realtor.com, and as we know, Realtor.com in general is pretty positive. You know, I mean that's good. You know, but they're in the business of promoting and selling houses, and so I appreciate their positivity. But you can usually find that positive spin on that. So here we go. Home prices flatlined last week as the growth of the nation's housing inventory continued slowing due to waning buyer demand, and I can vouch for that. And I know that I probably bring this up frequently, but it's important to note, I think, that, and if this show does anything, this is my hope, that real estate reality check is what goes on behind the scenes, what's going on behind the curtain. And when it says waning buyer demand, I'm on the internet where there's a number of us realtors, and I've mentioned this a number of times before, where they share their thoughts and tell what's going on. And there's a lot of agents going, does anybody have any buyers that wants to look at 123 Anywhere Street? There's a lot of that engagement going on, and that tells you that things are slow. Waning buyer demand, but the Federal Reserve's interest rate cut on Wednesday, the first of three expected this year, could give the housing market a much needed boost. After a cruel summer, Daniel Hale, marked by a stalemate between frustrated sellers and reluctant buyers, the week ending on September 13th saw the housing market moving at a halting pace, with early signs of price softening according to the latest weekly housing market trends report. What's happening is as those prices are getting soft, what has to happen is that a seller has to be motivated to sell their property, and they have to either lower the price or offer some sort of concession. They have to take action to entice buyers, and that's when softening comes. is when sellers are convinced that that's the step left. Because I'm going to tell you, as a seller, they don't. Even if I was a seller, I don't want to. I don't know what's going on here. I don't want to lower the price. you know, and they have to kind of find that for themselves anyway. So despite recent declines, historically high mortgage rates and affordability pressures are still holding many buyers back, prompting sellers to recalibrate pricing to draw attention. Heading into the fall, with total housing inventory at its highest level since before the pandemic, which is a big deal, buyers have more options to choose from and more time to make their selection. The reason for that is if prices are going slow or even declining, as opposed to a few years ago, buyers don't have to make snap decisions, which, in my opinion, snap decisions can sometimes end up with bad results. Would you agree with that, Rodney? Am I crazy on that?
Absolutely. Absolutely. I think there's even an article published about it, talking about, this specific snap decision of having to buy a home really quick. You remember they did that study, maybe it was like 14% or something like that was not happy with their purchase, So, yeah, I think that for the most part, when people buy houses, they get it right. Like they're happy and, no looking back kind of thing. But yeah, when you're having to make decisions under the gun like like buyers were, a few years ago, it's going to force that. But I will say, a lot of the buying, even though it was a snap decision, when they're coming, because a lot of people were coming in from out of area.
Mm-hmm,
and
mm-hmm.
from wherever they're coming from, they may have been selling $1 million and buying something here at 650, and the one at us at 650 or Tennessee 650 may have been even bigger and brick and bigger yard and nicer amenities. So when they come in and make that snap decision, it's easier for them to make that decision because they might be paying mostly cash or all cash or a large down payment. So they have the flexibility saying, this house is $1 million where we're coming from. Are you kidding? Even if I have to pay 700 for it, it's a steal.
Yeah.
So I think that was a big mindset that offset some of that snap decision. But for for most everybody else, which may only have been 20% of the market then, yeah, snap decisions may not work out the best.
Yeah.
Yeah.
It's, go ahead.
It just has anytime you make a quick decision on, heck, you could go to the grocery store and make a snap decision. You'd be like, yeah, dang it, whatever. So that I guess that's what I refer to, and especially when you're dealing with a house or whatever,
Yeah.
something you
I
can't easily get out of.
usually you can't usually get out of. I know that today's discussions, I have yet to run across somebody that is a purchaser, say in 21, 22 in that range, that had to do like cover an appraisal gap. They don't want to talk about that. I mean, that's not a conversation that really pleases most people. And there were a lot of, at least here in Tennessee, I don't know about in California where Ange is. Um, that's a good question to answer. We're going to get to it. But here in Tennessee, there were a lot of people saying that the out-of-state folks, and it could have been California, it could have been New York, because that's pretty high price too, that they were coming in with all these excess funds, precisely what Rodney was talking about, and jacking up the prices for the locals. And I can't say that there isn't an element of truth to that, because it only takes, if you have a multiple offer situation, which they were going crazy, you only have to have one out of state person that's willing to go 20 or $30,000 over ask in a multiple offer situation to kind of ruin it for everybody else. That it only takes one, so one can muck up the things for 8 or 10 people. So it's people were, I think, fairly accurate on that. Anyway, meanwhile, 7 metros located in the South and the West, led by Miami, have turned buyer-friendly, signaling that the national housing market is steadily becoming more balanced as the year's best time to buy approaches in October, which we're going to get to that in a second, which is counterintuitive on this. And I want to mention that what it said in the national thing, when we're talking about these numbers in general, it really is a national approach that we're taking on a lot of this stuff. There's the story we just told was local to Tennessee. So just want to make that difference. So let's see what Ange has got to do. Hey, young lady, see what she's got to say here. So if they keep saying they're expecting 2 more rate drops, why would they think buyers would line up? That's a really good question. What do you think, Rodney?
No, that's so accurate. I mean, they're not. But I will say is I'm not sure anybody's thinking that their buyers are lining up. Like this article was just about the affordability getting better. So I think the lining up part will come later. But you're exactly right. Whenever there's, Ange is right. Whenever there's you think if someone thinks
Hmm.
buyers love fences. It's a tough decision, so they love sitting on a fence. So if you give them a reason to sit on a fence, they've got their seat perched on the fence, and it's going to be there until the climate says different. Like I would 100% agree. I don't think rates right now are the greatest, and that's why I may avoid a refinance. The same reason somebody might wait to purchase is they feel like the rates are going to get better. But yes, there's not going to be any the you're right. When they announce that there's going to be more rate cuts, we're all waiting on the rate. Everybody's waiting on rate cuts. Now, we'll say, I say it, and I think I've even sent you an article last week saying, it happened again. They raised our rate, and our rates went up that day or whatever it was. They showed a chart on that of how many times the Fed lowers the rates and the mortgage rates actually go up. But Yeah, everybody loves that fence, Andy. I understand why, but it's like we've always talked about in our business, buyers on the fence, and that's it.
Well, and it's and this right here. This is my city was actually one of the few where days on market went down in August. Was surprised to hear that. That just goes to that's California. I mean, California just it continually surprises because it's just an ecosystem, an environment all its own, and it seems to operate under its own rules. And I, I'm telling you,
It,
I'd live if I
yeah,
could, I'd live there. you
local,
know,
local, local. But you'll go somewhere also in California, and but California's so big. Also, they're going to have five on the top list of going declining, and then five on the list that's the hottest in the market too. Um, But I wanted to go back to a point you were making about, when the California buyers or whoever kind of comes in and can ruin it. But, I think that I think when you see an entire population from a state or any state for that matter coming in and they see our property values as higher, I think we should take note of that versus thinking that what I'm saying? I think that when somebody comes in is willing to pay, then it's not ruining it for the locals. It's just like it's setting the market for a proper set of the market. Because I, if we'd went 7 years in Williamson County without a boom, I would think our prices would be too low. Without that
yeah, yeah.
COVID thing, I would think it would be too affordable for this area. If that sounds crazy.
You make total sense to me, and I'm not. Perhaps I didn't think that well enough as I was. It's not like I have it written down, but I think that you're correct. That if we live in a place where the market demands that, that means we're living in a good place. I mean, that's just what it is. But what happens for me, because I'm local, I get to hear my local buyers kind of complaining about it, or that's the conversation people would have. And there's an element of truth to that. It's hard if you're selling a house in Nashville, Tennessee, and it's a $450,000 house, and you got the same house out in California, and you're getting 1.3 for it, and making the move, bigger risk from California. I get that, but that's all I'm saying is
Yeah.
you are correct.
I'll add another to your example is that I forget which builder it was, and probably don't want to say his name, but he literally would not sell to anyone other than an out-of-state buyer. He was not. He was not putting in furnishes. He was not selling it early to where people could make change orders. They weren't doing any of that. They were saying, when it's available, I'm going to list it, and then I'm only selling it for 30,000 more than this last one I just closed on 2 weeks ago to an out-of-state buyer.
That's absolutely true, and I know who you're talking about, and I read. I don't think it was public knowledge, but I read someplace that was behind the scenes that stuff I was telling you about. Where agents chat, that he had actually termed it California pricing, and it was like what he
Yeah,
would normally have for a
yeah,
house plus 20% or whatever the number was. But that's how it was like it for this market here. That mentality of there's not going to be enough, and if you don't pay 60 over, you're never strong word going to get a house. People went crazy,
yeah,
including that builder.
yeah,
And God bless America. He had every right to do that. I
yeah.
don't think he's doing that today.
No, he's begging for people today, but that's par with the course right there.
Huh, now that's interesting. Really, the locals? Huh? Really? That
The locals like their complain, Angie. You're saying people in California complain about out of state buyers in California?
that's interesting.
Yeah,
That's interesting because we've got. I got to tell this story. It's short, but that's what this show is. It's funny when you have out of state people, and I love them. I mean, welcome everybody. You're all welcome, but just understand that like there's developments being built around here. In I live in Brentwood, but down in Franklin, they've got some big developments that's going on. Some big stuff, because we need the housing. But you'll have people that'll come in and they'll go to these meetings and they're complaining about somebody building in their backyard and they've been here like 7 months. They're how long you been here? Well, I got here in February. Not in my backyard. Shut up.
Yeah.
Get out of here.
Yeah, that's it's a wild thing there. But
yeah, no, she's confirming that it's people complaining about California. That was just one example, and I love Californians. I do. I'm not complaining. I'm just telling you what had happened in the market. I think that's fair. Anyway,
and I have I call him, obviously he's from California. I call him Johnny San Diego. He's a buddy of mine. We play golf together, and I've met him, and over the years we've kind of become friends, and I was talking to him about the same thing. He was like, I've heard the people say, "Oh, I'm not going to California, you're Tennessee or whatever," but it's the people that's moving here that are like-minded.
mm-hmm.
Like, it's not like what I'm saying? It's like everybody I've met is like, what they're coming here for? They're coming here because our schools are good and it's
Yep.
a great place to raise our kids.
Yep.
And that's what it's about. It's like, my buddy Johnny was like, man, schools are just crazy in California, where they was wanting them, just different values. And so it's like, the people moving in, if they didn't like Tennessee or the way, people were here, they'd probably be moving somewhere where they fit in, So I think it's, people have the same ideas and way they want to do things as in California as they do here, and it fit in well. So it's it's just kind of funny. It's like you would think that everybody coming, just the normal stereotype, but it's people moving here I've found to be just like us.
That's absolutely right, and it's clean and it's nice, and it reminds me whenever I go back to California, it reminds me this is just kind of that way too, clean and nice, and for the most part, pretty polite. Anyway, to that end, on Thursday, Freddie Mac reported that the average rate on a 30-year fixed rate it decreased to 6.26. I don't know what it is. What is it today? I didn't look.
Yeah, it's somewhere around there. I think it's a little lower.
Is it? Making the fourth consecutive week of falling rates. A day earlier, the federal, remember we're talking about home buyers having hope. A day early, the Federal Reserve policymakers voted to cut the central bank's benchmark to a range of 4.25%. Trump has been pushing an even bigger cut, arguing that it was needed to re-energize the sluggish housing market, but the majority of Fed governors opted for a more cautious approach, which didn't surprise anybody. While the rate cut, the first of 3 expected before the end of the year, was widely anticipated and already mostly priced into the mortgage rates. And that's what you were talking about, Rodney. That's why it didn't jump around, which is good. Realtor.com expects to see a modest increase in home sales in the months to come, which I think that's the case too, except it's going to be balanced because I'm telling you, we're like 2 minutes away from Halloween, and then it's Thanksgiving, and then it's New Year's, just that quick. Median listing price saw no year-over-year growth last week after experiencing a 0.9 annual drop the prior week. So prices seem to be moderating a little bit, almost done. Meanwhile, the median price per square foot, which adjusts for home size, decreased compared to the same period in 24, the second straight week following nearly 2 years of steady growth. The weak sales activity has finally caught up and stalled out this metric, meaning price per square foot, which for big numbers of houses, it's a great sampling. If I've had too many people say the price per square foot on that house is wrong, and I was like, that doesn't even mean anything, suggesting underlying home values are starting to soften. The typical for sale property waited for a buyer 6 days longer, as opposed to 3 days less, for Ange than a year ago, reflecting the market's slow pace, restrained by a combination of still elevated home and mortgage rates. The general economics uncertainty that's keeping would-be buyers on the sidelines, like Rodney. Give me any excuse and I'll sit on the fence. New home listings, a measure of sellers putting homes on the market, saw a 2.1% increase year over year after plunging 2% the previous week for the first time since April. Smith points out, however, that the number of fresh options on the market remains below the spring and early summer norm, and it all comes down to a buyer demand or lack thereof. Uh, Homeowners are less eager to get into the market as inventory continues to build and buyers keep to the sidelines. Meanwhile, the total number of properties on the market increased 17% year over year, marking the 13th straight week of slowing growth. At the same time, the week ending in September 13th was the 97th consecutive week of annual gains in inventory. That's saying something. Overall, there were roughly 1.1 million homes for sale last week, marking the 20th week in a row over a million listing threshold. That's a big deal. Finally, the active inventory is growing significantly faster than new listings, an indication that more homes are sitting on the market for longer. That's just what that means. What that boils down to, in my humble opinion, is nothing more than people have more options, period. You've got more houses that you can look at. And if a house is on the market for a long time, you can make a lower offer and pretty good chance the seller's going to talk to you. What do you think, Rodney, on the grand scope of that particular article?
Yeah, yeah, inventory is not our problem anymore. It used to be an issue, but inventory going up is not going to help us with our affordability, but it makes a lot easier, because you do have some negotiations there, but it's we need inventory to keep a balanced market, especially when we if the rates start coming down, we do not need another push up in prices.
Mm-hmm.
And that's exactly what would happen if we didn't have inventory. And it's like everybody always blames builders for not. Yeah, if we'd have built, well, nobody's buying right now. So why are builders? They can't line up and build and pay interest on it, and then banks foreclose on them, and then 10 years later it'd be like, oh, everybody builders should have built during that time. Like, maybe
And
the government will give them some money to do that, but that's just silly. You know what I'm saying? It's like they all, it's always, oh, we should have been building this whole time. Well, you should have, but the government's the only ones that can afford to do that. Like, you can't expect somebody else to build and carry that interest money and never sell that house.
yeah, if everybody's for what complaints people have about mortgage rates, get a builder's loan. See how
Yeah,
you feel about that.
yeah.
Plus, you're taking every bit of the risk, when you go into that blue tape walk. Ouch. Jeez Louise. So, and we're going to talk about that in just a minute. But for now, we know what time it is. Ready for Rodney's riff, Rodney?
Oh, yeah.
Oh, yeah. Rodney's
All
riff.
right. Here we go. Let's see here. Before we get into, I'll just say this is a lot here to hash out, and you don't have a lot of information. So we're going to get through it though. We sat down with a mortgage lender officer 6 months ago to game plan purchasing our forever home. She suggested a refinance an investment property with 90,000 loan at 3.5% to pay off that and pull out equity and cash. Albeit at a higher rate of 7.5, she ballparks the separate mortgage rate to be 6.3 to 6.5 with this down payment. What they're saying there is, even though the rate's 7.5, they would have been paying 6.3 to 6.5 on a second loan if they were going to get out money, pull that equity out. So evidently they had to have that equity out of that house. That's a kind of a key thing for me there. Um, Now that we are closing on a home, we asked her if we qualify for a 20-year because we like those rates more right now and think we can swing it. We were able to negotiate the home price down by 150,000, so feeling good about the budget. Surprise, she says our new DTI disqualifies us from even a conventional 30-year. We can't get a mortgage. How much did we get played? Is this even legal?
Huh.
Well, I'm not sure. Um, there's there's a lot going on right here. And first is that, you said at the very first statement, we sat down with the mortgage officer 6 months to game plan purchasing our forever home. And then they talk about what they did, but they did not say they even got the house for $150,000 cheaper.
Wow.
So what happened? Why weren't they? Why can't they get a mortgage now? So that's the whole thing I'm thinking of. Because if you went in there and said, I'm pulling, I'm doing this to do this, you should have been qualified with both payments, right?
Hmm.
So when you're not qualified, and then something goes wrong, I'm not, I don't see why or how that should have went wrong. So somebody did something that they weren't supposed to, whether it was a loan officer or the customer not giving full information here. Something was going down. But I will say this: it's terrible. Did you get played? I don't know if I'd really consider you getting played. But your very first meeting was not a success. When you went in there to game plan for a purchase
Hmm.
and you came out with a refi, you should have known your purchase was 100% good on the back end. And somebody should be able to explain to you why it's not, especially now that it's not. Something should have happened, which, you know, would have been beyond their control, which it's hard to see.
Hmm.
Somebody lose a job or something. You know what I'm saying? So
Hmm.
there's something very weird going on with this one. But let's jump into the comments, and it kind of brings up some more conversation, Pete. Here's talk to a different LO and see what they can do. There's a big chance they can game plan something for you that actually works. I totally agree with that. The second one, empty mammoth here. Lots of smart LOs in this sub that would be willing to run the math for you. If you post your actual numbers, income, deaths, down payments, purchase price, credit score, extra. And it's likely bad advice from the start to refi 3.5 rate instead of a HELOC or HELOAN. And I'm not so sure about that. The thing that, it's hard to compare those two. But what I do know was bad advice, whether it was from them or the customer did it themselves, is that they went to figure out a purchase and they didn't figure it out. Like they went in there and then they come out with money in a cash out refinance versus what am I going to do in 6 months? I don't understand how the LO didn't take the new mortgage on the investment property into account when you're using those funds on the new home. This is a rookie move. It definitely could be. It's like, but it's so in your face. I'm almost defending that loan officer because it's so in your face. It's like, how could you? You really couldn't have done that, right? You know what I'm saying? It's very weird there. There's would the rental income not offset that loan? Well, it depends. Depends on if they've had rental income before. Depends on how long they've rented it out. Did they put it on their tax return? What program they're going with. So the loan officer should have said, hey, you're gonna have to qualify with both payments, and then or they could have been talking about, hey, you qualify with, you're only going to qualify with for one mortgage, so you're going to have this rented out for 6 months,
Hmm.
or something like that. The void calls me. He should have listened. If the void was calling him, he should have went to the void. He says the loan officer did this wrong. It should have been a simultaneous close where both loans would have been approved and ideally the same escrow company you use, so they had deposit the funds for the cash out refi with the escrow company. You can't do them the same day, simul close, because a cash out refinance doesn't have a rescission period. Actually, investment properties don't. So if they were turning it into an investment property, they live in it, turn it into an investment property, they could have done that at the same time. But, they wouldn't have been going in there 6 months earlier. You know what I'm saying? Six
Mm-hmm.
months. To me, it sounds like, to me, I'm thinking that the customer needed the money a little sooner or something.
Mm-hmm.
I mean, like I said, I think something was going on. Here's a Revolutionary Care 175. Loan officer wanted the money they were going to make off the refinance. They didn't run the numbers with underwriting, talked to a lawyer. The loan officer made money from bad advice. That's terrible advice. Lawyer's not going to do anything. You can't, where are you going to go in there and tell a lawyer that you had a conversation with somebody? He could be completely right. They didn't run the numbers with underwriting. They could be, but that would have been, if I was a customer and I went in to work on my purchase, and from that result of that conversation, they say, okay, if you want to purchase this, what you need to do now is refinance this property and pull the cash out for your down payment. They're factoring that in. So somebody didn't do a good job, either the loan officer or the customer. Either way, both of them, in my opinion, are at fault here. How you didn't know you left a meeting. You know what I'm saying? Like,
Yeah.
that's what you're there for. Here's a good one, though. LOL from Bill Dizzle or something. You gave up a 3.5 for 7.5. Yeah, I wouldn't lend to you either after that terrible decision. That's just kind of funny. And somebody even says, like, imagine every lender giving you a test like that before loaning you money. It'd be like your like your dentist offering you some candy or something. If you take it, I'm not giving it to you. And then somebody, data. Here's a good one. Other lenders exist. Talk to them. I think that there's either a miscommunication with you or that lender. I would definitely be talking to somebody else. Going to have to sell the investment property. Maybe. That may be the thing to do, because in my opinion, your primary should be more important than an investment property. Let's see here. Another Fibros crypto debt to income OP. I don't even know what that. I have no idea what yours is, so I cannot answer that question. Whenever you ask for a loan, you should ask the loan officer what they need from you in order to satisfy what you want from them. That's not the worst advice. During that meeting, they should have went in there and talked about it and provided pay stubs, bank statements, and everything like that. Payoff statement, or not payoff statements, your mortgage statement, so you know what you're paying off, and hopefully they did that. But obviously something went wrong. Somebody else put, that's why you close both loans concurrently. Not really. You can close, first of all, when you refinance the 3.5 to 7.5, you were trying to get money out. Something was going on there. Nobody just gives up that for no reason at all. Here's one. Sorry, but you made a mistake by agreeing to a cash out refi at those rates. LO made a bad plan, and you made a bad choice to agreeing to it. That one sounds good to me. The LO had a bad plan, and the customer didn't help none. But the customer's supposed to be getting good advice from their mortgage professional. So it's just hard for me to see somebody's actually done this. But being a regard LO isn't illegal, unfortunately. Being a regard LO. I think he meant
Right.
something else there.
Yeah, he did. Something really not PC at all.
And I'll go with the babbling shorty here. I've been a loan officer for 40 years. And at
Wow.
this point, it's impossible to say what finally happened. What is your new DTI in today's current rates? What happened to your credit score? What happened to your income? Yeah, that's why I'm so dumbfounded. I'm with that person right there. Is like, you know, there's way too much information, but that's fine. It's this is for conversation purposes. Um, you know, God, it stinks that. I just go back to that first meeting. I would, you know, you're your best financial advisor. If I offer anybody ever some financial advice, I offer you this: that you're your best financial advice. If something in your stomach doesn't sit well, or if it's not something doesn't seem right, don't fool with it. You're your best financial advisor. Nobody knows your circumstances better than you. So um, I encourage all the borrowers to, do their research, get some opinions, get multiple, get a couple different opinions. It doesn't hurt. So that's my reality check on that thing right there. My riff, my reality check. Boom.
Thank you. Boom. That's pretty good stuff. Just you have to be your own best advocate. I get it. I tell you, the thing that's sticking to me is how did they negotiate $150,000 off of a property?
Yeah, that's well. I
Ah,
couldn't tell if they found one lower or whatever. There was a couple. That one wasn't.
that's a lot.
There was a lot in that story that's unusual.
Little fishy.
Yeah,
Unless it was a
and
$4 million property, there I gotta see 150.
yeah, I mean you never get the full story. You can't get the full story on a Reddit thread, but
Yeah,
it's a good conversation.
it's a
it's
really
a,
good
it's a good
conversation.
learning experience because if anybody I may not have gotten clear, but I guess my message is that do your due diligence. Like when you go, if you talk to a lender, just take your time and make sure write your questions down, make sure they're all answered. Get second opinions if you feel like you need to. Trust
Yeah,
your own instinct.
that absolutely. It's a big decision. Excellent riff. It's getting better every week. You are such a smart guy. So there's two things that I wanted to touch on this next. Maybe the property didn't appraise for as much. I don't know about that. It sounds to me like they were just trying to stretch too far. I don't, but I'm an idiot. I don't know anything about it. The we touched on this last week, and it was the idea that the Fed was paying attention to the housing market, and that the housing market, of course, is what 20% of the economy. It's a significant chunk of it. But the conversation on the article that we had is that Powell and his band of cronies were paying attention to that. And a few weeks ago, I saw this little blurb. It was about the White House on this. And so that's what I wanted to mention really quick. And then, if you don't mind, Rodney, we'll jump into an off the top because there's some other really big news in real estate, and I'd like to get your take on it. So let's touch on this article real quick. The U.S. housing crunch, the policy shift that could trigger a market rebound. That sounds a little bit uh, optimistic, but it could. And it starts right out. A national housing emergency could light a fire under housing stocks. Now they're talking about this is an investor kind of a page, but in order for investors to profit, it means the housing market has to do better. I think those two are pretty much attached. So it would still apply that something good news happens for us too. So I'll read this really quick. I think it's relatively short. So if you've ever heard older folks talking about the way the housing market was back in their day, probably sounded like more like fiction. I'll never forget how bewildered I felt when my grandmother told me her first house was 11 grand. I grew up in those days in the 50s and the 60s where I think that was possible. At that time in the early 50s, there you go, the average home price is around 8 grand, while average household income was about $4,000 per year. Make it on that these days. In other words, the price to income ratio back to them was 2 to 1. Anyway, it's going to go through and it's going to talk about the supply is stuck near record lows. Younger people can't afford to buy. We get all of that. Older homeowners aren't selling. New construction hasn't kept up with demand. This is not news, right? A result, the worst housing crisis in modern U.S. history. I don't know about that, but it's not fun. So here we get into the meat of what I'm looking for at any rate. Treasury Secretary Scott Bessent recently hinted, and really all we need are hints for the market to respond, right? Let's talk about stock, that the administration could declare a national housing emergency this fall, which they seem to be pretty good at declaring emergencies, wouldn't you say? That they
I would,
that would be a skill set, you know. he didn't he, he didn't share the details, but make no mistake, Washington has plenty of levers it could pull to reset this market. We're talking tariff and material cost relief, like lumber. I think they've been helping that some degree, but you could always help more. Incentives and grants for first time buyers. Incentives meaning what Rodney you were talking about was for buyers, for builders to make it a little less red tape-ish for those guys. Down payment assistance, streamlined permitting, that's what I'm talking about. Changes in housing finance, even the use of federal land for new development. That still I get lost on that. It's like, why would you need that? I don't understand. I mean, you could go a half a mile outside of Franklin and there's plenty of room to build. Have you gone down there, Mac Hatcher? Jeez, it's
yeah, this is Tennessee though. You go to you know New York.
that's that's thank you for pointing that out. You're absolutely right. Because we got land everywhere. And there's a lot of complete people complaining about their backyards. We talked about that. If that happens, the market will thaw and housing stocks could fly. It seems like a different topic, but it's not. Meaning this is a prime time to start accumulating house related names. Um, so it goes through all of that. The Fed can't fix housing alone. Now, Fed rate cuts could help. The Federal Reserve has started down that road, but let's be realistic. This market is too broken for monetary policy alone. It'll take a policy sledgehammer. And so here are the things I was trying to get to. And Rodney, chime in on this because I'm counting on you. This is where the White House comes in. If the administration does move forward with a national housing emergency, it has several levers it can pull, many of which have fast, tangible impacts. Tariff and material cost relief, reducing tariffs or granting exemptions on imported lumber, steel, or other key building materials could immediately lower construction costs. Can't you imagine if they just eliminated or minimized tariffs on building related materials, what that would do?
I don't know. I was talking to a builder a couple weeks ago, and
Hmm.
they actually get some stuff from China, and they were paying the tariffs. So, but at the end of the, or at some end of a quarter, they had already they had took it like a year's profits and bought as many as they could before the tariff hit. So when the tariff comes in, it's they're doing like 50% of their cabinets here and 50% there. So they're going to build that into the price. So I just don't see like, this is such a big, huge problem. I don't see the fix. I don't understand. I think there's ways they can help it, but without rates, I don't see affordability. I don't see affordability going back to a decent number. It's never going to go back to like it was in the 50s, 60s, or whatever, that 2-to-1 ratio. I don't ever see that, but we could get it back we just need to start making, you know, inching towards affordability, and I think that's what we've been doing with more listings. And if rates keep going, the government hasn't pulled any of these levers ever. So we'll see.
And then when it says first time buyer support, grants, down payment assistance, or expanded federal housing FHA benefits would directly ease affordability challenges. Do you see that sort of a thing as a long term fix? Or is that more of a band aid? That type.
Um, Grants and down payment assistance can always help, in my opinion. FHA expanded FHA benefits would directly ease affordability challenges. Like you remember when they 3 or 4 years ago, or 2 or 3 years ago, they did they lowered the FHA MI premium,
Yeah, yeah,
monthly MI
yeah.
premium.
Mm-hmm.
So that was a huge deal, but that only took 30 basis points off of a mortgage insurance, and they're still paying 0.55 on most of FHA's mortgage insurance, but it's better than 0.85. So they definitely help the affordability there, but it's like, what else can they do?
Right.
I'm lost at that. I just think rates are the biggest thing, and if somehow they did grants or something like that, I think it would definitely help. But it's not going to make more people. The disparity is the house payment versus how much they're making, and that's what you kind of got to tackle. And the house payment, you can only do so much to it to save those dollars.
Yeah, I think that Angie's got it. She's got it right. Um, the only way you're getting affordability is the house go down in price or wages have to increase, and to a degree, I have to agree. I have to agree with that. But that's something that sellers certainly don't want to see happen. I mean, the situation that causes prices to drop is going to be uncomfortable. I think we're in that time right now, a little bit. You know, but here's some other options that they're talking about. Regulatory streamlining. Now that addresses for new builds, I think more specifically. I believe that to be the case. Federal guidance could push localities to accelerate permitting timelines and stuff. They're trying to do that around here. Mortgage finance tweaks. Agencies like the FHFA and Department of Housing could cut fees or loosen restrictions. How do you feel about that?
It's
Is it enough? I guess is the
in my
question.
opinion, it's not strict underwriting that's caused it. We're talking about affordability issues.
Mm,
And like Ann said, wages need to come up, but wages aren't going to come up like the house, like wages aren't going to spike up. Wages are going to go on the graph, like 1 or 2% a year forever. It's not going to be, but our house prices in America skyrocket at times, and they don't plummet. In my opinion, they don't go down enough to, they just hit, instead of 1 or 2% gains, they might hit 7 or 8% or 15% gains in a year, and wages are never going to keep up with that.
yeah.
I think people just got to really watch their dollars where they're going, and to afford a house these days, you've got to make good income and have low debt.
Yeah. And the last one it says is the use of federal lands. And again, I'm not against that idea. I'm kind of not. But like you said, New York and all that kind of stuff. That's where I go out and drive for 7 minutes and I see tons of acreage. That's not going to happen in New York. So I understand completely where you're coming from on that. But I just think that these are all good things. But to have all of that stuff happen enough to increase affordability seems unlikely to me. That unless the market pressure is such that affordability becomes more of a reality. That's just I don't know how else to answer it. I mean,
man, it's a tough issue. It's a tough issue. It's like, how do you, because every homeowner wants their house to be worth a fortune,
Oh,
you know,
oh,
and it's, and I'll tell you the regulatory stuff. You remember when Dodd-Frank came out after the crash in 10
yeah,
or whatever it was. Um, a lot of those regulatory things made our cost to do loans double and triple.
really,
Um, oh yes, yes. The paperwork, like, but pre Dodd Frank, I had processors that could do 40, 50 loans a month, and they were good workhorses. I, I don't mean that in a bad way. They were excellent employees. Um, but post that, and if you look at today with all the regulations, if they do 12 to 15 is a good one. I mean,
wow,
the number of people have to touch a file and the cost it takes to do a file, you know, has tripled because of of over regulations. And some of it's been good, most of it's been terrible. Um, but there has been a lot of good stuff come about it. But the cost of it, yeah, I mean, the government did that cost. The government tripled the cost of these things, you know.
really.
So yeah.
That I tell you the one thing that's changed though, um, and I mean we can vouch for this. I'm sure it is more expensive, but golly, people are when somebody is pre-qualified to buy a house, they're really pre-qualified. There's very, very few deals I see these days through myself or anybody that's related in my industry saying the loan fell apart because the buyer wasn't qualified. That doesn't happen anymore very much.
Yeah.
So, well, we're going to have to save for next week something that I did want to. I was going to do a little off the top, but we've only got like 2 minutes left, and that's not enough time. But I'll give you a teaser for next week. What it is, the two things that's happened. Compass, who is a real estate firm, has is going to merge with a company called Anywhere, and that includes Century 21, Keller Williams, just tons of brokerages. And the Compass is going to become the gorilla in terms of agencies. Huge. Now, what's interesting is Compass has, and this is from my broker who has a very strong opinion about this, that Compass, no, this is not a bad reflection. They run at a deficit. They've never made a profit. And yet their stock keeps going up. And so they're buying Anywhere with stocks. So that's
That's
an interesting.
yeah.
It's
You're to
interesting.
have your broker come on and explain that with us.
I
He has
bet
a
you he would.
pretty good pretty good perspective on that.
Yeah, he's quoted by Inman and all the guys. Is that good or bad? You know, that's here's the take on that, Ange. I'm glad you asked that question. The the verdict is out on that. Nobody knows, because the terms that's going to be used is it's going to revolutionize the industry. Is that good or bad? I don't know. I mean, think about being the big guy on the block isn't okay. So here's the second story that we'll talk about more thoroughly next week or not is Zillow. Everybody's heard of the big Z, Zillow. I got no problem with Zillow, but now they're getting sued. Remember the NAR lawsuits and all that stuff that was flying around? My broker a year ago said, wait till you see the paper that's flying in the near future. Well, it's here. And so somebody has sued Zillow because they went on Zillow, looked at a house, and then to find out after the fact that Zillow directed that person to an agent that was affiliated, pays money to work with Zillow, and it costs 40%. The agent has to pay Zillow 40%. The reason for the lawsuit is that agent now can't negotiate nearly as much as if it was an independent, not using Zillow, because they've already baked in
Right.
40%.
So they've
So,
so they've given away 40% of their commission for the lead,
correct.
and yeah. and so they can't. So they can't if anytime they cut from $10 to $5, that means they've lost another 40% of that. So whatever.
Yeah, yeah. And
Yeah,
so you're gonna, and so if there's a bigger story, well, they're both big stories. People are saying that could be bad news for Zillow. That's all. We'll talk about that more next week. I'll even show you the page so you'll love this, Rodney. This is what it looks like. Compass deal, major power play, and Zillow's it's in here someplace, but
yeah.
it's gonna be big things are coming. We'll talk about that. We'll flesh that out next week. And thank you so much for being, they always do that. I can't tell you how glad I am to see you in there. Thank you very much for joining us today. Any final thoughts there, Rodney?
Have a great week.
Have a great week. See you next Tuesday. Thank you very much. Bye now.